Hello everyone, this is Ken from SPARX Asset Management Korea. Today, we would like to introduce SPARX Korea Mid and Small Cap Equity Strategy along with some opportunities which we can monetize on. Our mid and small cap strategy has rapidly grown over the past 1 year. Thankfully, some overseas investors were able to understand the opportunity sets in the area and we were able to win some meaningful mandates. The lead portfolio manager of the strategy, Ms. Sun-Young Park, joined our company in 2017, bringing in 15 years of experience, of which she spent mostly researching mid and small cap sized companies in Korea. Before I hand it over to Ms. Park for more detail, please let me give you a brief update on SPARX. As of July end, SPARX Group's asset under management is approximately $11.6 billion, achieving around 10% growth year on year. Under difficult macro environment derived from series of trade wars, COVID-19, etc., we are grateful with what we have achieved. SPARX Korea also was able to grow its AUM from last year's struggle, reaching approximately $500 million as of July end. The growth of business was mainly backed by the overseas clients' acknowledgement of SPARX's competitive ability that relies on our investment philosophy of macro is aggregate of micro, which we always been sticking to it ever since the establishment of the company. Now, let's hear from Ms. Park.
Thank you, Ken. Hello, my name is Sun-Young Park and I have been managing SPARX Korea Mid and Small Cap Strategy as a lead portfolio manager. As Ken mentioned, I would like to talk about my strategy and the Korean market opportunities today. SPARX Korea Mid and Small Cap Strategy is a benchmark agnostic strategy with the portfolio size of 30 to 40 carefully picked stocks through fundamental bottom-up research. The strategy looks for companies that are undervalued yet have substantial growth potential. Oftentimes, undervalued companies are overlooked by the market, and hence the share prices do not adequately represent the valuation close to the intrinsic value of the company. However, in order to avoid the value trap, we thoroughly analyze the quality of earnings, growth potential, and management competency to look for any catalyst that can narrow the gap between the market value and the intrinsic value. Based on that, we focus on creating our portfolio with the wonderful companies. I have 7 criteria to define those wonderful companies. To mention a few, I believe the business model should be simple and intelligible with high entry barrier. The balance sheet should be well capitalized, and the cash generator should be consistent. I believe my criteria will allow me to find great companies that are very much likely to achieve the sustainable growth in the future. Despite many people believe that the COVID-19 has completely changed the world, we have barely made changes to our portfolio. The pandemic has only accelerated some areas which the world already planned to, and also it became evident with the performance of the representative portfolio achieving 22% return in 2020 as of July end, while the Kospi appreciated 2%. In 2020, COVID-19 has become the hottest topic in the world and also in the investment field. There are many speculations about how the society will evolve and what kind of opportunities will arise after the COVID-19. However, as I have mentioned previously, COVID-19 has only accelerated the development of specific areas. The unexpected catalyst has urged the investment professionals to thoroughly analyze the investment opportunity, deviating from the old ways of evaluating the intrinsic value of the companies. After discussions with my fellow investment professionals, I strongly think that only those professionals who adapt to the new normal set by the coronavirus can identify opportunities. As a portfolio manager, it is my responsibility to diligently learn and familiarize with the social norm and find investment opportunities. I have always been keenly looking into the industries that will be better recognized in the future, as my strategy focuses on sustainable growth. Korea is a relatively small market but has plenty of investment opportunities. Opportunities will arise from the semiconductor, globally competitive areas such as the 5G, biotech, and IT. We will be able to find opportunities through structural changes happening in Korea at socioeconomic and corporate levels. We are also seeing K-wave spreading to a lot of countries, creating new opportunities. Korea is renowned for its memory semiconductor prowess. The leaders like Samsung Electronics and SK Hynix are planning to invest a large amount to step into a system semiconductor, including the foundry business, where those companies have very little market share comparing to the memory market, where they have the dominance. For your information, the system semiconductor market size is approximately twice as big as memory markets, making the chip market more attractive for entry. The Korean government has also announced its plan to support the shift from memory to system semiconductor to make South Korea as a semiconductor powerhouse. This will not only increase the revenue of those companies, but will create a different supply chain, the ecosystem, where small to mid-cap sized companies will inevitably be promoted to grow. Next, South Korea was the first country to commercialize a 5G network. Many global IT companies and telecom companies are looking at the Korean's network advancement. South Korea already has the competitive companies, including the equipments, and also companies that can utilize as a platform to create more advanced technologies. Companies in auto and IT are likely to benefit from this advancement and create opportunities. Korean biopharmaceutical industry is also globally well recognized for quality products with supply capabilities. Through well received for the capability to develop pharmaceutical products, they have been expanding their global presence as a contract manufacturing organizations, shortly CMO, and biosimilars. Some companies have already surpassed the size and the level of technology of global giants. Like many countries are experiencing, Korea is also aging. This phenomenon has changed the consumption pattern, and so many companies had to revisit their business plans to adapt to the new change. Through this, we are seeing rise and fall of companies. Aging has not only affected the consumption patterns and the lifestyle, but also affected the corporates. The management of Korean companies are also aging, and such they are planning for the next steps, either succeeding to the next generation or selling businesses. Interestingly enough, the number of M&As has been increasing. Furthermore, global popularity of Korean cultural contents has increased as the untech phenomenon spreads. According to the Korean Creative Content Agency, the revenue from exporting Korean cultural contents, including the dramas, music, etc., has almost doubled in 2019 compared to 2014. Moreover, YouTube view counts to Korean music artists are also growing substantially. What is notable is that the view counts are coming from all over the world. Also, K-drama became popular across the border through Netflix, and some are already ranked high on Netflix, including the regions like the US and Japan. Global demand for Korean cultural contents is growing, and this is creating new opportunities. Improving corporate governance in Korea is shedding lights on valuations of many Korean companies. Traditionally, Korean conglomerates were focused on protecting their own sake under the name of the family business. In the past, Korean companies avoided paying high inheritance taxes by creating complex cross-shareholding structures. However, with the current government's urging for corporate reforms and also with the National Pension Service adopting stewardship code, the corporate governance changes are imminent to Korean corporates. As an example, Korean largest conglomerate group Samsung has publicly announced that they will separate the ownership and the management of the group, and we are seeing other conglomerates starting to follow the movement. The digital transformation and green have been making up the important portion of the economic stimulus package introduced by many countries. On July 14th, the Korean President Moon Jae-in announced the Korean version of the New Deal plan. This large-scale economic rehabilitation plan is designed to promote a digital transformation and eco-friendly industries. The goal of the Korean New Deal plan is to invest 160 trillion won, which is 160 billion US dollars, over the next coming 5 years, to create 1.9 million jobs that are directly or indirectly related to digitalization and greenification. Although it seems like a complete paradigm shift, which may require adjustment to many investors' portfolio, we have revisited all the companies in our portfolio, and we're able to confirm that their long-term business plans and growth potential remain the same or will grow at a faster rate. That is all with what I wanted to share with you today. Thank you for listening. If you have questions, please contact us. I hope you stay safe and healthy. We look forward to working with you. 감사합니다.